Most people think investing is about chasing profits, but real investors know it's about building protection first. Because before you can grow wealth, you have to make sure it survives. Your biggest financial risk isn't missing an opportunity, it's being forced to sell when life hits. That's why wealth isn't just a game of numbers, it's a system of defense and growth working together, like armor and fuel. And every truly wealthy person knows this balance by heart. They don't build portfolios that look exciting. They build portfolios that endure. Because wealth isn't about the size of your next gain. It's about never having to start over again. So, in this video, we'll break down the 8 investments every American should have. The ones that protect you in chaos, grow with time, and quietly move you closer to freedom. These aren't just assets. They're tools for stability, peace, and independence. Because when your money works in harmony, not in chaos, you stop surviving and start building a life that lasts. Your first real investment isn't in the stock market, it's in peace of mind. Because before you grow wealth, you need to protect it. Most people skip this step because it feels too simple, too safe, too slow. But that's exactly why most people never find real financial freedom. An emergency fund is not about returns. It's about control. It's the difference between a setback and a collapse, between a problem you solve and a crisis that breaks you. When your car breaks down, when your job ends, or when life simply reminds you who's in charge, this fund buys you time, and time is the most expensive asset you'll ever own. The rule is simple. Save enough to cover 3 to 6 months of essential expenses. Rent, food, bills, the things that keep your life running when income stops. Not in a checking account that tempts you to spend it, but in a safe, liquid place that grows quietly while you sleep. In 2025, the best homes for this money are high-yield savings accounts, paying around 4 to 5%, money market funds, or short-term Treasury bills. They won't make you rich, but they'll protect the version of you that's still becoming rich. And that's the point. The emergency fund isn't an investment in numbers, it's an investment in decisions. When you're financially safe, you think better, act slower, and invest smarter. You stop reacting to fear and start moving from clarity. Most people don't lose their wealth because of bad ideas. They lose it because of bad timing, selling what they love to cover what they need. The emergency fund ends that cycle. It's not exciting. It won't go viral. But it's the quiet foundation under every fortune that lasted. Because real wealth doesn't start with taking risk. It starts with surviving it. The US dominates the global market, but no empire stays on top forever. That's why smart investors look beyond their borders. Because true diversification isn't about owning more companies. It's about owning more worlds. For decades, the American stock market has been the safest growth engine on earth. But even the strongest engine needs balance. One look at history shows it. Japan, once unstoppable, has barely grown in 30 years. Europe, once the center of innovation, now struggles with slow demographics and heavy debt. And while the US still leads, the next wave of growth may not be born here. Investing internationally isn't a bet against America. It's a bet on humanity, on the idea that innovation doesn't belong to one flag. That's why funds like VXUS, VT, or IXUS matter. They spread your portfolio across thousands of companies in dozens of countries. You're not chasing exotic markets. You're protecting yourself from being trapped inside one. In 2025, global dynamics are shifting fast. Emerging markets are catching up. Energy transitions are rewriting trade routes. And technology is no longer an American monopoly. The dollar is still strong, but power is becoming multipolar. And investors who ignore that risk missing the next decade of opportunity. Having international exposure doesn't mean moving your money overseas. It means making sure your future doesn't depend on one government, one currency, or one economy. Because when the unexpected happens, and it always does, the world doesn't fall all at once. Different regions rise and fall at different times. That's what keeps your portfolio breathing when one side of the planet is holding its breath. So don't think globally because it sounds sophisticated. Think globally because it's safer. Because no matter how strong America is today, even the best players still need a bench. And the investors who last are the ones who quietly prepare for every possible future, not just the one they hope for. Once your foundation is safe, it's time to build. And for most Americans, that means owning a piece of the greatest wealth machine ever created, the U.S. stock market. For over a century, it's been the heartbeat of capitalism, a place where ideas turn into companies and companies turn into fortunes. It's messy, unpredictable, and sometimes brutal. But it works. The market rewards patience, not prediction. Every decade has its storms, recessions, bubbles, crashes. But those who stayed invested through all of it have seen wealth multiply over time, because while fear is temporary, progress compounds. ETFs like VOO, SCHD, or QQQ make it easy to own the market itself. They give you exposure to America's most powerful engines, Apple, Microsoft, Nvidia, Amazon, and hundreds more, that shape how the world works. These aren't just companies. They're infrastructure for the modern economy. When you own them, you're not gambling. You're partnering with progress. Each share you buy is a worker that never clocks out, a silent employee that builds, innovates, and compounds wealth while you live your life. And the numbers tell the story. Over the last century, the S&P 500 has averaged around 10% per year. That's enough to double your money roughly every 7 years, without a single lucky guess. But the key is consistency. The market doesn't reward intensity, it rewards endurance. Don't fall for the noise of stock tips or market timing. No one beats time itself. The real winners are the ones who stay long enough for compound interest to show its quiet magic. So invest in the U.S. market not because it's trendy, but because it's tested. It has survived wars, inflation, politics, pandemics, and panic. And every time, it came back stronger. That's not luck. That's the power of innovation, discipline, and time, the three engines that never stop running. For most of history, wealth was protected by metal. Gold was power because gold was scarce. But in the digital age, scarcity has taken a new form: code. Bitcoin is no longer a rebellion. It's a foundation, a new kind of asset born out of distrust and perfected by math. In 2025, it's not just retail investors buying it. It's institutions, funds, and even governments quietly adding it to their balance sheets. After the approval of Bitcoin ETFs, Wall Street embraced what it once ignored. The largest asset managers on Earth, BlackRock, Fidelity, ARK, now hold exposure. And the reason is simple. Bitcoin isn't about getting rich fast, it's about staying free long term. Only 21 million will ever exist. More than 19 million are already mined. That fixed supply makes it the opposite of fiat currency, a system where more dollars can always be printed. Bitcoin can't be inflated, censored, or seized easily. And in a world of growing debt, that makes it powerful. Gold protected value in the industrial age. Bitcoin protects sovereignty in the digital one. It moves at the speed of the internet, across borders, without permission. That makes it not just a hedge against inflation, but a hedge against control. Of course, it's volatile. It can drop 30% in a month and still be stronger than most currencies over 5 years. That's why the key isn't going all in. It's having just enough to matter, and not enough to lose sleep. For most investors, 1 to 5% of a portfolio is enough to capture the upside and absorb the chaos. Bitcoin has survived 15 years of attacks, bans, crashes, and doubt, and every time it came back higher, stronger, and harder to kill. Because Bitcoin isn't just code, it's conviction. A decentralized belief system built by millions of people who decided that trust should be earned, not printed. You don't need to love it, but ignoring it might be the most expensive act of faith in modern finance. Not every investment is meant to grow your money. Some are meant to protect it, and protect the people you love most. That's why the fifth investment isn't about returns, it's about responsibility. Life insurance isn't exciting. It doesn't move with the market. It doesn't go viral. But it's one of the few things that guarantees peace when chaos arrives. Because the truth is simple. Your most valuable asset isn't your portfolio. It's your ability to earn, your income, your skills, your time. That's the engine behind everything you've built. And if that engine stops, what happens to everyone riding with you? That's what life insurance is for. It turns your future income into immediate protection. It replaces what you can no longer provide, so your family doesn't have to start from zero. In the US, a healthy 30-year-old can get a $500,000 term life policy for less than $30 a month. That's less than most people spend on streaming services. And yet, it covers something priceless: the continuity of your family's life. There are two main types: term life and whole life. Term is simple, pure protection for a set period. Whole life mixes insurance with investment, building value slowly over decades. The best choice depends on your goals, but the worst choice is having nothing at all. And here's the irony: the younger and healthier you are, the cheaper it is. Which means the time to get insured isn't when you need it. It's long before you do. Life insurance doesn't just protect against death. It protects against delay, confusion, and financial collapse when loss hits. It gives your loved ones breathing room, options, and dignity. We insure our cars, our homes, even our phones, but often forget to insure the one thing that makes them possible: ourselves. Because no matter how strong your financial plan is, it only works if you're still here to execute it. Real wealth isn't just about what you leave behind. It's about how well the people you love can move forward. The final investment isn't about excitement, it's about endurance. Because wealth isn't built in a rush. It's built by those who give their money time to work. Retirement accounts are where time becomes your ally. They're not just savings vehicles, they're tax shelters designed to multiply your future freedom. Every dollar you contribute is a soldier that fights for you long after you've stopped working. In the US, the three main tools are the 401k, the traditional IRA, and the Roth IRA. Each one plays a different role, but all of them serve the same mission: compounding quietly, without interruption. The 401k is your employer-sponsored powerhouse. In 2025, you can contribute up to $23,000 per year. And if your company offers a match, that's free money. It's the only legal way to double your contribution instantly. The traditional IRA gives you tax breaks today. The Roth IRA gives you tax freedom tomorrow. Both let your money grow without the drag of yearly taxes. And that's what turns decades into fortune. Most people underestimate what compounding can do inside a protected system. When taxes and emotions stay out of the way, the math gets to do its job. A dollar invested consistently month after month becomes something extraordinary over time. Not because you picked the best stock, but because you never stopped feeding the system. Think of your retirement accounts as a long conveyor belt. Every paycheck, a small piece of your present, is sent forward to meet your future. And one day, those small, forgotten deposits become the reason you never have to work again. You don't need to predict markets or time the economy. You just need to stay disciplined enough to let time and consistency do what they always do: reward the patient. Because freedom doesn't come from one lucky trade. It comes from years of quiet contributions that never took a day off. That's how real investors retire early. Not by guessing right, but by staying right long enough. Every empire falls the same way, not by invasion, but by inflation. Money loses meaning long before it disappears. That's why the most overlooked investment isn't about growth, it's about defense. In a world where governments print trillions, the smart investor owns what can't be printed. Sometimes that's gold. Sometimes that's Bitcoin. But often it's something quieter: US Treasuries. Treasury bills, bonds, and TIPS are the backbone of stability. They don't make headlines, they don't promise fortune, but they protect everything else you've built. TIPS, Treasury Inflation Protected Securities, are designed for one mission: to preserve your purchasing power. When inflation rises, their value adjusts. When prices fall, they quietly wait. They don't chase returns, they anchor your portfolio to reality. Series A bonds do the same, blending a fixed rate with an inflation rate that updates every 6 months. In 2025, they still offer protection that banks can't match. Because safety isn't sexy, but it's essential. Think of treasuries as the ballast of your ship. They don't move fast, but they keep you steady when the waves get rough. When markets crash, they're the quiet assets that hold the line. And when confidence breaks, they become the safe harbor everyone runs to. Owning treasuries isn't about pessimism, it's about realism. It's accepting that markets don't rise forever, and neither does optimism. Sometimes defense is the best offense. Every portfolio needs assets that grow and assets that guard. Stocks make you rich. Bonds make sure you stay rich. And when inflation tries to steal from you in silence, TIPS whisper back, "Not today." Because wealth isn't just about expansion, it's about endurance. And endurance begins with protection. Every generation rediscovers the same truth. owning something real changes how you think about money. Because when markets crash and currencies weaken, land doesn't vanish, it just waits. Real estate has always been the quiet backbone of American wealth. Not because it's fast, but because it's permanent. It's an asset you can live in, rent out, or pass down. And that permanence creates emotional stability, the kind that stocks can't offer. You don't need to buy mansions or flip houses to benefit. Even owning one home or investing through REITs, real estate investment trusts, gives you exposure to something tangible. Apartments, warehouses, hospitals, and offices, all paying rent, all compounding in the background. In 2025, real estate still plays the same role it always has: protection against inflation, chaos, and uncertainty. Because when the cost of living rises, so do rents and property values. It's not speculation, it's math. But real estate teaches patience. It ties up capital. It tests your discipline. And that's why it quietly builds millionaires. Not overnight, but over decades. Even if you never buy property directly, adding REITs to your portfolio connects you to the physical world, to the spaces where the economy actually lives. While most assets exist on screens, real estate exists in sunlight. It's the bridge between the digital and the tangible, between numbers and reality. And there's a deeper truth here. Real estate isn't just about ownership. It's about perspective. It reminds you that money isn't the goal. It's the tool that allows you to build something that lasts beyond your lifetime. Every financial storm passes. Every market cycle resets. But the ground beneath your feet, if you own it, becomes your anchor. Because while everything else is priced in dollars, land is priced in permanence. The smartest investment you'll ever make isn't in the market. It's in yourself. Because no asset compounds faster than knowledge. You can lose money, jobs, even timing, but what you understand stays forever. Most Americans spend decades working hard, yet never learn how money actually moves. They chase raises, buy liabilities, and wonder why freedom keeps running faster than they do. That's not lack of effort, it's lack of awareness. Financial literacy is the multiplier of every decision. It's what turns a paycheck into opportunity instead of survival. It's the reason some people escape the cycle, and others never do. You don't need a degree in economics. You need curiosity, discipline, and a hunger to understand the rules before you play the game. Books, podcasts, mentors, they're not expenses. They're shortcuts through mistakes that would take years to fix alone. One good lesson can save you thousands of dollars. One wrong belief can cost you decades of progress. And the market doesn't forgive ignorance, it taxes it. The wealthy know that education is leverage. They read not to sound smarter, but to act faster. Because every insight compounds quietly, long before the results show up in your bank account. Financial literacy isn't about memorizing terms, it's about recognizing patterns, fear, greed, time, and value. It's seeing what others miss because you've trained your mind to look deeper. You can't control markets. You can't control inflation. But you can control how prepared you are for both. And that preparation, the quiet hours spent learning, will always pay the highest dividends. Because the best investors aren't born confident. They become confident by understanding what everyone else avoids. Knowledge doesn't just grow your money, it grows your peace. Wealth isn't a number, it's a system, a structure you build piece by piece until it starts working without you. Every investor dreams of growth, but the ones who last know that protection is what makes growth possible. Because freedom isn't created by taking risks, it's preserved by balancing them. The 8 investments you've just seen aren't random choices, they're pillars. Each one guards a different part of your life. Cash protects your present. Stocks grow your future. Bitcoin defends your sovereignty. Insurance protects your loved ones. Real estate grounds your wealth in reality. And retirement accounts quietly buy you time. Together they form something rare: stability. The kind that lets you move through chaos without fear. The kind that turns money from a source of stress into a tool for design. Because at some point, wealth stops being about return on investment. It becomes return on peace. You stop asking, how much can I make? And start asking, how far can I go if I never have to start over again? Every dollar you save today is a silent worker that never clocks out. Every decision you make compounds, not just in numbers, but in freedom. And that's the ultimate goal. Not luxury, not applause, just independence. If this video helped you see wealth differently, make sure to like and subscribe. It helps this channel reach more people who are quietly building, just like you. Leave a comment and share where you are on your journey, because every story matters, and yours might be the one that inspires someone else to begin. Wealth isn't built in noise, it's built in balance. And when you finally have that balance and you don't chase freedom anymore, you live it.